What's up, everyone? It's Cowdy with Money Vesting. So we've got a big week on our hands. We've got, not only do we have some companies reporting earnings, but of course, the big topic of discussion where the focus is going to be on the Fed. We've got Jerome Powell and the FOMC pretty much giving us the economic projections, unemployment projections, interest rate policy, and of course, their projections for inflation as well. So all of that is going to be released next week on March 22nd. That's going to be on a Wednesday. So in this video, I'm going to break down everything that is coming up from an earnings and an economic standpoint that we need to prepare for going into next week. So I hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. If you are just joining us for the first time, we're trying to get to 75,000 subscribers here pretty soon. And the link to our Discord and Patreon is going to be down below if you're interested in joining us. And of course, getting access to all the alerts and as well as the private videos and tutorials and lectures and a lot of other benefits included. And there is a 16% discount that is available for a limited time till the end of this month if you want to take advantage of that as well. So link's going to be down below. So this is going to be the earnings calendar for next week. And we don't have a lot of companies coming out in terms of reporting. We're towards the end of the earnings cycle as well. So a few companies that are going to be interesting to me is going to be Nike. That's reporting on Tuesday after the markets close. I'm sure GameStop is going to be on a lot of people's radar as well. Then we've got Chewy reporting after the bell on Wednesday. And that's pretty much it. And then finally on Thursday, we've got Accenture reporting along with FactSet pre-bell. And then finally on Friday, we've got Express reporting before the markets open. So not a lot of companies that I'm particularly interested in. Definitely Nike. We'll be paying attention to Chewy, Express, Accenture, and FactSet as well. But that's about it. So let me know in the comment section down below if there's any companies you're interested in, and maybe we can take a look at that during our live streams. So this is going to be the economics calendar. It is going to be a Fed / a housing week as well, because we do have the existing home sales. We've got the MBA mortgage applications, and we've got the new sales, new home sales, all of that coming out in the upcoming week, as well as, of course, the Federal Reserve and Chairman Jerome Powell. So when it comes to the MBA mortgage applications, this is going to be released on March 22nd at 7 a.m. And the expectation is for us to continue to see an uptick. We have been seeing an uptick in the mortgage applications because the rates have started to come back down a little bit because yields overall have dropped quite a bit. However, this is going to be the MBA Mortgage Bankers Association of America. The purchase index is still at a 28-year low, coming down to lows from back in 1995. In fact, we have seen a little bit of an uptick, but the activity when it comes to refinancing, new purchase mortgage applications, and new purchases in general is still down to a 28-year low. So we're still not quite seeing a lot of momentum in the housing market. In fact, it is slowing down, and we are seeing prices also coming down, a little bit slowed down from what we have seen in 2021 and 2022. So something definitely to pay attention to, because we have talked about some of the recession indicators, and as home sales do decline every single time, we have seen a recession in the last 4 times that's happened for the U.S. economy. But of course, talking a little bit about the Fed's balance sheet, that's also coming out next week. That's usually hidden. That's going to be on Thursday, March 23rd. It's going to be all the way at the bottom here, and that's coming out at 4:30 p.m. Eastern. Not a lot of people talk about it, but it is going to be very, very important, because we just learned the Fed's balance sheet last week was pumped by $300 billion, literally just printed out of thin air, because a lot of the banks were borrowing money from the Federal Reserve, using their discount rate, using their discount window at a 4.75% discount rate, payable, I think, back in about 90 days. But of course, we're going to learn more about their new program, which is their BTFP program, the Bank Term Funding Program, where a lot of the banks can pretty much use their existing collateral, U.S. Treasuries and mortgage-backed securities at face value, the securities that are already underwater, and pretty much borrow against that collateral from the Federal Reserve. So again, we'll find out if the Fed's balance sheet continues to increase, and then we come to the main event, and that is going to be the FOMC announcement. The Federal Reserve Chairman Jerome Powell is going to be talking on March 22nd at 2:30 p.m. Eastern, and this is going to be released. The statement with the summary of economic projections going to be released at 2 p.m. Eastern, and we're going to learn more about, one, how much interest rate hike did we see in March? In other words, what was the rate hike? Number 2, what is the projection moving forward in terms of unemployment, GDP, interest rates, and inflation? Those 4 things the Federal Reserve is going to project out for the next 3 years and then longer run as well. So that's going to be the summary of economic projections. And right now you'll notice the market is very much pricing in 25 basis points and consistent cuts over the next several months. So markets right now only expecting a 25 basis point hike from the Federal Reserve, and then I think 6 to 7 cuts expected over the course of next 12 months from the market, which is a substantial amount of quantitative easing. I'm not advocating for higher interest rates, as I've already mentioned, but I do think that this amount of quantitative easing will certainly increase those inflationary pressures once again, especially when you consider the balance sheet is once again pushing higher on a week-over-week basis, and nearly half of the quantitative tightening that we did in the last 1 year from a Fed's balance sheet perspective was all given up in just 1 week. So it's a very, very tricky time, very uncertain time, that's for sure, for the market. And again, a huge week coming up. Jerome Powell is going to be, his speech is going to be the talking point for the entire week, right? Whatever he says, the markets are going to be moving on that. And I'm sure the Fed funds futures are going to flip back and forth depending on what Jerome Powell says and what the SEP also shows us. Now, we'll be doing a more separate, more dedicated video on Jerome Powell and the Federal Reserve and what's coming up, and 4 to 5 questions that we need answers to, right? It's all going to be around economy and, recession probabilities, the banking crisis, interest rates, inflation, all those things. I'll kind of come together and do a more dedicated, more separate analysis on what are some of the questions that we need answers for before we can start to make some decisions in the market once again. But the market right now is certainly pricing in for a lot of QE, expecting a lot of rate cuts over the next 12 months. So that's all going to be for today. This is the week coming up. Like I said, very, very important week. The Fed's balance sheet is also due. But as always, if you enjoyed this video, found it helpful. Now for the S&P 500, very quickly going over those numbers, we do have a support at 3770 levels. So that is a support that we have talked about in our previous videos. However, I do believe that it's possible for the S&P to get up to 4,100. We're not that far off from 4,100, and that is going to be that next sort of resistance or that target to watch for the S&P 500. And you'll notice that we have seen a little bit of a recovery from those levels very, very nicely. So, this past week, the markets were up. S&P was up a little bit, I think over 1%, and the NASDAQ was also pushing higher. S&P was up 1.4%, the NASDAQ clearly outperforming, up over 4.4%, but 4,100 is going to be that next resistance. That's the next target that we are watching for the S&P, and of course, we got the NASDAQ resistance sitting all the way up to 12,000. So this right here, 12,200, is going to be that resistance. We're kind of validating that support for the NASDAQ from this previous lower highs, from that previous resistance. So very strong week, of course, 4.4%. I've already done a video on the technicals, kind of suggesting how we are seeing an outperformance on the NASDAQ with respect to the S&P 500. And a lot of it has to do with the liquidity shift happening away from banking sector, utilities, and some of the other staple stocks over more towards growth and tech, and considered to be more of a safety trade at the moment, kind of investors hiding out in these sectors as the dust settles. So I hope you guys enjoyed this video, found it helpful. If you did, make sure you drop a like, subscribe to the channel, and let me know your thoughts and your comments down below. As always, make sure that you drop a like, and the link to our Discord and Patreon is going to be down below. Happy investing. I'll see you all in the next video.